This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices settled higher on Friday and recorded a second consecutive weekly gain as fresh U.S. sanctions on Iran and the latest output plan from the OPEC Plus producer group raised expectations of tighter supply. Brent crude futures rose 16 cents, or 0.2%, to settle at $72.16 a barrel. U.S. West Texas Intermediate crude futures rose 21 cents, or 0.3%, to $68.28. On a weekly basis, Brent rose 2.1% and WTI about 1.6%, their biggest gains since the first week of the year. On Thursday, the U.S. Treasury announced new Iran-related sanctions, which for the first time targeted an independent Chinese refiner among other entities and vessels involved in supplying Iranian crude oil to China.
Iranian oil shipments into China are set to fall in the near term after new U.S. sanctions on a refiner and tankers, driving up shipping costs, but traders said they expect buyers to find workarounds to keep at least some volumes flowing. Washington on Thursday imposed new sanctions on entities including Shouguang Luqing Petrochemical, a teapot or independent refinery in East China's Shandong province, and vessels that supplied oil to such plants in China, the top buyers of Iranian crude. It was the fourth round of sanctions on Iran's oil sales since President Donald Trump's February call for maximum pressure on Tehran, including efforts to drive its crude exports to zero.
Moving on to the top news in the energy sector.
2 tankers hit by U.S. sanctions are due to offload Russian Arctic oil in Syria for the first time, days after Moscow made its first known delivery of diesel there in more than a decade, according to LSEG data, a government source and local TV. One of the tankers, Aquatica, with some 100,000 tons of Russian oil on board, is set to offload in Banias port soon, according to a government source and pro-government Syria TV. The vessel arrived on Thursday, but has yet to offload, according to the TV report and the government source. The second tanker, Sakina, is still on its way to Banias with another 100,000 tons of oil, LSEG data showed, and was set to arrive on March 25.
The United Arab Emirates has committed to a 10-year, $1.4 trillion investment framework in the United States after top UAE officials met President Donald Trump this week, the White House said on Friday. The framework will substantially increase the UAE's existing investments in the U.S. economy, in AI infrastructure, semiconductors, energy, and manufacturing, the White House said in a statement. The White House did not outline how UAE investments would reach $1.4 trillion, with some of the deals unveiled as part of the framework having already been announced. Next, we have the top news in metal markets. Copper prices fell on Friday under pressure from a stronger dollar, while mounting worries that the United States may impose new import tariffs on the metal raised the New York futures premium over the London price to a record high. Benchmark 3-month copper on the London Metal Exchange fell 0.8% to $9,854 a metric ton by 16:56 GMT. The contract hit its 5-month high of $10,046.50 on Thursday. Most active copper futures on the U.S. Comex exchange were last down 0.1% at $5.1085 a pound. They hit a 10-month high on Thursday.
Gold fell 1% on Friday due to a stronger dollar and profit-taking, although lingering geopolitical and economic uncertainties and U.S. Federal Reserve rate cut prospects kept bullion on track for a third consecutive weekly rise. Spot gold was down 1% at $3,015.43 an ounce at 1:43 p.m. Eastern Time, 17:43 GMT. U.S. gold futures settled 0.7% lower at $3,021.40. Bullion has gained 1% so far this week. Gold, traditionally viewed as a safe haven investment during times of geopolitical and economic uncertainty, and typically thriving in a low interest rate environment, has hit 16 record highs this year, reaching an all-time peak of $3,057.21 per ounce on Thursday.
We will now look at the top news in the agricultural sector.
Palm oil closed lower on Friday and booked a second straight weekly loss due to weakness in Chicago soy futures and a persistently slower Malaysian palm oil export performance. The benchmark palm oil contract for June delivery on the Bursa Malaysia Derivatives Exchange lost 37 ringgit, or 0.84%, to 4,376 ringgit, $990.27, a metric ton at the close. The futures were seen trading sideways today with prices opening lower, pressured by weakness in Chicago soy oil futures and a persistently slower Malaysian palm oil export performance, said Anil Kumar Bagani, head of research at vegetable oil broker Sunvan Group.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.